We got Google. A little Nvidia price target hike. Let's talk about that for a sec.
Well, Nvidia shares up about 0.5% right now and got another price target bump, this time from TD Cowen. It seems like every day we have a new price target hike for Nvidia to talk about. The analyst at TD Cowen raised his price target on Nvidia to 165 from 140. So, Nvidia's trading just around 130 right now, so about $35 upside. That was 28% upside from Friday's close. In terms of the analyst also, of course, reiterated his buy rating. He thinks that demand for AI systems, Blackwell and Hopper, will remain robust, saying one thing remains the same: fundamental strength at Nvidia. In fact, our checks continue to point to upside in data center as demand for Hopper Blackwell-based AI systems continues to exceed supply, saying overall we see a product roadmap indicating a relentless pace of innovation across all aspects of the AI compute stack. So TD Cowen also thinks Nvidia will beat Wall Street's estimates when it reports Q2 results on August 15th. Expects Nvidia will also raise its outlook thanks to that strong data center demand. So we heard similar sentiment from KeyBank last week when they were saying they expect upside to the results and to guidance, and said despite the fact that Blackwell is going to be released in the second half of 2024, they're not seeing any signs of a demand pause as demand for the H100 remains robust and they continue to see rush orders. So very similar sentiment to what we heard from them. Nvidia shares up about 0.7% right now.
James Anderson, one of the most successful tech investors who's known for his early bets on Amazon and Tesla, recently made a statement that blew the tech industry away, and you're going to want to hear this if you're a tech investor. Anderson said that he expects Nvidia's market cap to reach a terrifying $50 trillion in only a decade. To put that into perspective, this colossal valuation is literally equivalent to the GDP of whole states and to the values of dozens of big corporations combined. But how is that even possible? Such a number was never even in consideration, so why did Anderson make this prediction? That's what we will go through in today's video. So please, don't miss out. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
There was also a commentary in a Financial Times article from someone that I've never heard of, but they're reporting on James Anderson, who apparently was an early investor in Tesla, Amazon. They had like a whole piece about how Nvidia is going to be worth $50 trillion. So that, we're in that state. That's where we're at for markets. The animal spirits are raging. $50 trillion in a decade. So, all right, that's usually when things start getting a little bit crazy, but okay. That's the vibe that's out there, the tone that's there.
James Anderson, best known for his early bets on Tesla and Amazon, said that the potential scale of Nvidia in the most optimistic outcome is both way higher than he has ever seen before and could lead to a market cap of double-digit trillions. He also added that this isn't a prediction, but a possibility if artificial intelligence works for customers and Nvidia's lead is intact. Nvidia has been the biggest profiteer from the AI boom, as its chips are essential in powering the world's most famous AI models, such as OpenAI's ChatGPT. Moreover, at this point, every major tech company uses Nvidia's chips. As a result, Nvidia shares have increased by 162% since the beginning of 2024, pushing the company's market cap to over $3 trillion. In turn, Nvidia briefly surpassed Apple and Microsoft in terms of market capitalization. Owing to this, Nvidia is not willing to slow down anytime soon, as the firm's CEO, Jensen Huang, stated that the company is the center of the new industrial revolution, artificial intelligence. Anderson added that the company's persistent exponential progress, competitive advantages in hardware and software, culture and leadership are exactly what he looks for when investing. Bearing in mind that Anderson last year teamed up with the holding company of Italy's Agnelli family to launch Lingotto Investment Management, where he runs a $650 million fund whose largest position is the U.S. chipmaker. On top of this, Anderson's words must be seriously thought of, as he is best known for the 40 years he spent at Baillie Gifford, where he ran its flagship Scottish Mortgage Investment Trust, where he first bought Nvidia in 2016 and helped make the Edinburgh-based firm a notable tech investor. He has also mentioned that when Scottish Mortgage initiated a position in Nvidia, it wasn't clear what would be the main driver for the company's growth, and that he didn't decide whether it would be gaming, crypto, autonomous driving, or AI, but left it to the course of events. He has also differentiated between the current semiconductor giant and some of his former astounding bets in the likes of Amazon and Tesla, saying that Amazon and Tesla didn't start from highly profitable and dominant positions, but had to get there. Hendrik Bessembinder, an academic, has significantly influenced Anderson and Bailey Gifford's investment approach. Bessembinder discovered that over the years, only 4% of stocks contributed to all net wealth creation. This supports their belief that fund managers should focus on finding companies that are big winners, and Anderson explained to investors in a letter why Nvidia falls into this category. His statements on the firm are a game changer. So, let's find out what he said exactly. Hello, everyone, and welcome back to Investocracy.
We're still early.
How early? Explain, I mean, to people who say, how can that possibly be true? Now you're starting to see the articles trickle out. Oh, AI might not be that transformative. Oh, talk about why this stock can still have more room to run.
Yeah, you bet. So people get nervous, and I get it. Don't get me wrong. I mean, the stock, and not just stock, but the numbers have run so far, so quickly that people do worry about sustainability, and I understand that. But at the same time, you can sort of look at where the shares are trading on a valuation basis. They're much cheaper than they were before this started. As much as the stock has gone up, like the demand for the parts and the impact of the financials has gone up even more. It's been really amazing. We are at the point now where we're seeing like massive amounts of capex from the hyperscale players, which I think is good. I think where people get nervous is on the enterprise side. We are still in the experimentation phase, and this is true. Like enterprises tend to move slower, but I do like the amount of breadth that we are seeing here. There are many enterprises that actually are experimenting here. Nvidia talked about this. I think they talked about like large cloud vendors were only about 40 or 45% of their total revenues there. Their customer base is still broadening out. We are seeing more and more deployments as business models are getting built on the enterprise side. But it does take time. Like the hyperscalers can build up very quickly. The enterprises, take a little longer. And I kind of get that nervousness. But at the same time, everything we're seeing right now, at least in terms of near medium-term demand, still seems really strong. It doesn't look like we're seeing any signs of slowdowns yet.
Anderson wrote that real growth in data center AI chip demand appeared to be running at about 60% a year. Looking ahead over the next decade, he said that 10 years of 60% growth in data center revenue alone and unchanged margins would reflect in an astonishing earnings per share of $1,350 and free cash flow around $1,000 per share. Assuming a 5% free cash flow yield, one Nvidia share might be worth an incredible $20,000 in 10 years, and this translates to a market capitalization of $49 trillion. Anderson said that the chance of this happening ranges from 10 to 15%, taking into account that the current market capitalization of all companies included in the S&P 500 is $47 trillion. Anderson said that it is the long duration of the development of GPU usage in AI, and not just AI, from excitement through potential pauses to transformation of industries that is most important to him when investing, and that's why Nvidia stock is a great stock to own, in his opinion. He also added that the journey would be volatile, and it wouldn't surprise him if Nvidia's value dropped by 35 to 40% at times, saying that he will buy more if that happens. At the time of this video, Nvidia trades at more than 47 times its estimated earnings per share for the upcoming year. More notably, it is responsible for about 30% of the S&P 500's 17.7% gain this year. The increasing influence of Nvidia and other large tech companies on stock market indices has created challenges for fund managers who don't invest in them. For instance, Terry Smith's global fund underperformed its benchmark in the first half of the year because he chose not to invest in Nvidia, saying that he wasn't convinced about its future. Anderson has also used the chance to diminish the doubts surrounding the current thriving AI industry, and he said that the narrow generative AI for basic and consumer tasks may well be overblown. but he sees the big issue as whether it can solve serious problems in 10 years, such as autonomous driving, robotics, and drug discovery. And in that sense, it's actually the absolute opposite of hype, as Nvidia is quietly but firmly leading in backing and providing these areas. So, what does all of this mean for Nvidia stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
All right, let's talk some more tech here. And the latest from the sell side, Jenny Horn taking a look at the Nvidia hype. What's going on this morning?
The Nvidia hype, as it just keeps going. And I know you were just talking about the way this is like the only thing that carries the overall market, but right now it's favorable because
Sure.
Nvidia is adding another, just shy of 1% this morning, gained about 2% yesterday. So right now the momentum has swung obviously more in the favor of those that are bullish on like Nvidia and the AI trade. KeyBank today though raising its price target to 180 from 130 with an overweight rating. So that would obviously be well above the new all-time high, which is just around like 140 a share in Nvidia. But they said they're not seeing any sort of pause in demand for their H100 overall figures, despite the fact that we are seeing Blackwell launch in the second half of this year, no demand pause, they're saying, which I think is like the key takeaway. So they overall see demand just continuing to grow. They also do believe that demand for GB200 should support data center revenues of over $200 billion by 2025. And I think the data center revenues are fascinating. I mean, like more signs that we continue to see of like the money flowing into data centers is strong. We did see that this operator of data centers, which Cyrus One is what it's called, said Monday it's secured about $8 billion worth of credits right now, continue to build its data centers. So that to me is like been the most interesting and the most, I think, exciting part of Nvidia's growth is like their data center growth and their revenue, which has been astounding. And this note from KeyBank though today did also include lowering their price target on AMD, on raising their price target on Marvell. But I have to say that this was objectively still a very bullish note because every single price target, even the reduced ones, were still well above where like AMD is currently trading.
This prediction is definitely great news for Nvidia stock investors, as Anderson is seeing an incredible future approaching the firm. And such a statement like this would definitely boost the stock higher, as it will strengthen the investors' confidence in the stock and attract buys. And although it's not easy for the company to keep growing and break records at the same pace, especially when its gigantic valuation leaves it vulnerable to any setbacks, whether it is a slowdown in the AI investments or new threats by competitors, none of that has shown up in the numbers, and numerous companies appear to continue investing in the AI space as of now. Blackwell also could keep the momentum going up this year, and a revolution in AI capabilities like artificial general intelligence, or AGI, would protect the stability of Nvidia's growth the upcoming few years. With all of these factors in mind, Nvidia stock remains a very safe, moreover, great buy that you will not regret, as the company still has not fulfilled its utter potential. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.